Hello, everyone. This is Gaurav Jain, and welcome to the second episode of our credit series. I'm super excited to talk about further on the overdraft and how we can innovate this space. And I'm an SVP at Valid Systems, and at Valid, we build AI-powered solutions on the risk management and deposit sides and credit. And I'm pretty excited to welcome this time our industry veteran, Kevin Moss. He has a deep expertise in fraud, credit, and the banking sector. And I'll let you to introduce Kevin and talk more about it yourself.
Gaurav, thank you for having me today. I'm excited to be here and talk about some really important stuff. I'm a consultant. I work with startups and financial institutions in in fraud. Been doing a lot of work in the fraud space, but also help people with their credit and underwriting and account management strategies, as well as work with a number of the neobanks. Uh, so, so very excited to be here and look forward to our discussion.
Awesome. We are glad as well. So thank you, Kevin, for joining us. So I want to discuss a few things and want to get your opinion on the overdraft fees and the regulatory landscape changes. And early this year, we saw changes from the regulators, like changing the Reg E and Z. How especially the large banks with an exercise of more than $10 billion, like they start looking to reduce the overdraft fees to almost like from like I would say $20 or $30 to almost $3. How you see that the overdraft industry has evolved over the period of time and how it's impacting the financial institutions revenue.
So it's interesting. I've been in financial services for 39 years, and I've worked in the banking side very heavily for the last 20 plus. And so when I look at the banking side, banking over the years, overdraft fees were there as a deterrence against overdrafting. I think with electronic uh, uh, growth in debit and ATM transactions, multiple channels came into play, and so banks' models were geared around allowing customers to we would pay items into overdraft as bankers, uh, and we would charge a fee, or if we returned an item, we would charge a fee. And over the years, that fee went up. And as with all things, I think there were always situations where customer was buying, a cup of coffee, or and they'd be charged 30 or $35 or something along those lines. And so I think, a couple of things happen. Number one, those kinds of practices, I think the banking system has started to weed those out and put in thresholds and uh, alert processes. And I think the banking system is handling overdraft fees more responsibly today than they were, say, 15 years ago. Uh, I think the second thing that's happened is a thing called neobanks, where the Chimes of the world, the Varos of the world, the Currents of the world, a number of banks have opened up and provided alternative opportunities for people who don't charge overdrafts. So I think competitively, there's been pressure on the overdraft fee because there's now a number of digital alternatives. I also think that when you think about service and you think about responsible banking, there are definitely situations where the banking system has had to, I think, address situations more responsibly. So, but I think the CFPB, which is there really to protect consumers, still feels that the fees that bank charges for overdraft are too high. So now they're trying to come in and mandate as part of the overall junk fee assessments that the president has asked the regulators to look at, that overdraft fees are just too high. So I think, where we're at today is I think a lot of the banks have put in capabilities, for example, to alert people and allow them to deposit funds. There's overdraft protection, whether it be a credit product or to a savings account. There's really a lot of ways that consumers can protect themselves against incurring fees. But I think where we are today is that if the CFPB is successful at orchestrating a reduction in the overdraft fees, it's clearly going to put pressure on the banks likely to reduce the items that they pay into overdraft. Because part of what allows people to pay items into overdraft is some of the fee revenue that covers for some of the losses that they experience. So I think where we're at is there's going to be pressure on the banks to reduce their operating losses because they won't have the revenue streams to support that level of loss. So I think this is where I think it's a great opportunity for Valid Systems because you guys have some great tools for deposit fraud, for check fraud and other things. And so I think the sophistication around making overdraft decisions is probably going to have to increase because you're not going to have the revenue streams to support the level of risk that you're taking on.
That's a great insight, Kevin, and thanks for sharing that.
Thank you, Gaurav. Thank you. And I would just say to the audience, you guys should really talk to Valid Systems. It's a great team, great culture in the company, and they have great tools that could really help you in your endeavors.